Good morning, good afternoon. It's Friday. Happy Canada Day. It's Canada Day long weekend. Welcome to CMJ Live. I'm your host, Charles Matthews. And yesterday we had a phenomenal show. And so I can't do one show without having a back-to-back phenomenal show. So I brought my special guest. How you doing, my friend?
Good morning.
All right. Tell everybody who you are.
Good morning. My name is Kevin Williams. I am a mortgage agent with Home Capital Solutions, a division of Dominion Lending Centers.
All right. So yesterday we were talking about, with my guest, doing business and being financial ready and then doing what you have to do. So I said, okay, part two, let's bring a financial person in to really say what we can. You know what I mean?
Sure.
But let's go back. Let's give them a throwback on who you are first. Before we dive into the business, let them get to know you, because we've been friends for a long time.
We have.
Yes. Back in the days, balling. You know what I mean? We used to play some ball. We used to have some fun.
Bramptonites, yes. We see each other. Basketball courts. We could be at the mall. We could run into you all different parts of town.
Now we're at the same gym.
Same gym, getting it in, getting sweaty. It's wonderful.
So are you a Bramptonian?
Yes. I was born in North York.
Yeah.
I lived in Malton. Maltonites, stand up. I lived in Malton for the first 5 years of my life, and then we moved to Brampton.
Yeah.
So I've been living in Brampton since then. So
Okay.
that we'll call it 30 plus years.
Okay.
Seen a lot of changes in Brampton. Love my city. I'm living in Mount Pleasant now, so It's wonderful to see all the development that has happened over the years, and it definitely relates to the real estate and how it's growing in our city.
So what high school did you go to?
I went to Cardinal Leger.
Okay, there you go. See?
Congratulations to all my fellow Leger Lancers that graduated. It's a big time right now. Lots of kids out there that graduated. Good for you. It's important stuff.
It is.
It's important
I
stuff.
had a meeting at Four Corners.
Okay.
So I parked at the Underground Rose Theater.
There was a party down there yesterday.
I came up, thousands of people graduating all over, and I was like,
yes,
wow.
Yes.
That was us how many years ago?
Oh, just the other day.
That's right. Just But
You're
big
looking
shout.
young, Chuck.
I try, what I mean? No, but the funny thing is it's amazing how times have changed.
Yes.
Because I'm thinking to myself, okay, these young people graduating, they don't know what's in store. You know what I mean? So they graduate high school, they go to college, university, but whatever they get at college, university, it gets down to the nitty-gritty. Then what?
Yeah.
They got to get...
And no OAC anymore as well, right? No grade 13. So
no.
like, what's OAC?
Yeah. So
it used to be a 13th grade, kids. Yes.
So now you got to move on to successful life. You got to do financial ready.
It's true.
You got to go for a mortgage. You want to get a house.
Right.
I want to talk to them about getting ready now. Because when I started, it's as you got older and you were like, uh-oh, I got somewhere to live. I need to do this. I need to do that. But if someone like you came to me early and said, okay, these are certain things you have to look for.
Definitely.
Maybe we can help it out, right?
It's definitely important.
The company you're with now, tell everybody what you do and how you can help them.
Okay, well, I'm a mortgage agent. What that is I help individuals find financing for their homes. I help individuals learn and find out how much they can truly afford with regards to what sort of property they can pick up. I help clients as well that already own properties. That are looking to perhaps acquire more properties, consolidate debt, and looking for the best deals in the market. Now, as a young person, the younger you are, the more important it is for you to get a grasp of this sort of information, because the more time you spend saving and allocating your savings towards that goal is the sooner you're going to get there. Now, you said that you didn't have that information initially.
Yeah.
If you had it up front, maybe you would have owned a home even sooner.
Yeah, because a lot of people don't know, okay, you start off, and then a lot of people don't know, what do I need? So for me, when I started, I didn't have visas. I didn't have those sort of stuff.
Right.
So I didn't need that stuff thinking, oh, I'm not going to need it. I'm
True.
not going to do whatever, right?
I hear that often. That does get said a lot to me. And the funny thing is about credit is very important. We all need credit in our lives, whether you are actually using it now or not. The funny thing about it is, by the time you actually need to have credit, it's usually a little bit harder to acquire it. So sometimes it's good to get yourself ready, get prepared, establish yourself with some credit, because when it comes down to the time to actually acquire a mortgage, which is the largest debt most individuals acquire in their life,
right,
you need to have some sort of credit background. If you've never had credit all of your life, if you've barely used it, you paid cash for everything, how is a lender, a major lender like a mortgage company, going to feel comfortable with regards to lending you $100,000, $200,000, $300,000 if we're not too certain you're able to actually handle $1,000 credit card? So it's always important. Start with credit. Credit is the backbone of you as an individual. It's your name. It's what you have at the end of the day when no one else is going to give you money. All you have is your credit. So as a young person, I was fortunate to have the opportunity to acquire a position working with Canada Trust. Actually, it was before it was merged with TD Canada Trust.
Right.
The two banks came together. It was just Canada Trust. So I was a bank teller right out of OAC. That was the grade 13 year. I was 18 years old. So I was able to become a bank teller, and I absorbed a lot of information with regards to credit. As a young person, it is mandatory and it is important that you do start yourself with some credit. Don't wait until you need something big before you actually look into it. Now, it could be as simple as a credit card. Sometimes when you mention credit to individuals, their eyes light up and they gasp and all the air comes out of the room.
Because the main thing is, okay, if they say credit card, I'm like, owe money.
Run up debt.
Right. But then,
wrong thought.
So then how much, for example, how much should somebody get for a credit card?
Well,
so is it okay for me as a young student or a young person graduating, say, give me a $500 balance credit card? Do they consider that as something feasible that they're paying off, or does it have to be a certain amount?
Establishing credit is important, period. If you're new to credit, everything is totally based on debt servicing. We all have different numbers based on how much income we make and how much we're able to carry. Now, when you're relatively young, you're not going to get a huge limit or anything. Not that I would recommend it in the first place, but you still should get out there and try to get yourself established. Get yourself a $500, $1,000 card. But the main thing to keep in mind is getting credit is not a right, it's a privilege, just like having a driver's license. They don't hand out driver's license to every and anybody. You have to pass the test. So when you get the credit, it isn't for you to now take the credit and run it up and buy, the latest Jordans and the hottest clothes out here. The point of it is to establish yourself. So live within your limits. If you are going to make purchases, for example, some of my students that are graduating now, you're going to be going to colleges and universities.
Books,
you're going to be
dorms,
bombarded
everything.
as soon as you get there with, hey, come get this card, come get that card. And to be funny, it's very funny. I still have my York University card that I've had since when I first started there.
Right.
And it's amazing because now I keep that card. It's kind of a memorabilia thing, but it also has a lot of great features that I can use these days, including like balance transfers. I'll get into that a little bit later. But the main thing about it is start. Get started. Don't wait till you're 25 years old before you start to establish your first piece of credit. It's mandatory when you're looking to acquire larger pieces of credit down the road that you get yourself 2 pieces. So when I was 18, literally when I was 17 and a half,
wait, hold on. Let's
I was working and I applied for my first card.
Yeah, but you said 2 pieces of
credit.
So Visa's one, or MasterCard, whatever the case is, a card. And then what would the second one be?
A second piece of credit could be another credit card. It could be another Visa card. It could be from a different institution.
Okay, so they're looking for 2.
Yes. The main thing is to be able to carry 2 pieces of credit.
Okay.
It shows responsibility.
Oh, okay.
Now, we all probably have friends that maybe have had 1 or 2 pieces of credit that took that credit and went to town, right? And later on maybe felt, the consequences of not respecting the credit that they got. So this is why I'm telling you, just because you obtain it doesn't mean it's a free-for-all. It's a very serious privilege. Utilizing the credit and making your payments, utilizing the credit, making payments every month is what's going to establish your credit score.
So then let me ask you this then.
Yeah.
If we need 2 pieces of credit, instead of me getting $1,000 on one card, how about I just split it? If I know I can handle 1,000.
Okay.
So isn't it better for me to do 500 on this card and 500 on this card?
Are you talking about actual balances or limits?
Limits.
When you apply for cards, when you're relatively new to the game, perhaps you'll get a $500 card. You might even get 1,000. You might even get 3,000.
Right.
These days, credit can be easily advanced to individuals that are starting for the first time. Everyone's getting their first opportunity. Here's your chance. The credit card companies say, as a new person, credit's decent. Usually when you're first starting with credit, your credit score is relatively decent.
But they always say, we can give you blah, blah, blah.
Right.
Doesn't mean you have to take it.
Does not mean you have to take it. But you got to know yourself as well. If you know you have a bit of a... Okay, so for example, if you know you have a heavy foot and you're driving on the highway, you might want to use cruise control if your car has it so that you don't get yourself into trouble, right? So there's always checks and balances with regards to
same thing.
What's available to you and how you utilize it. Now, again, having credit is power,
Yes.
It isn't, here's the rope that I'm giving myself to hang myself, although some people have done that.
Right.
Now, there's ways out of that as well. And, you know, part of my job every day is to counsel individuals on these items, such as credit, because if you can qualify, if you listen to what I'm telling you and you're able to qualify for a mortgage, you'll be able to qualify for a credit line. You'll be able to qualify for a Visa card.
Okay.
There's so many cards and specialty items out there that are actually giving back to individuals that have good credit, like you're getting free points and rewards and so forth without any sort of annual fees. And the main thing about it is the better your credit is the more options you're going to have down the road.
Okay.
Like if your window is literally this big right now because you have no credit, you get more credit involved, your window starts to grow, you start to expand, and you get more options. And that's what's most important for all of us.
I try to teach some of my young students when they're coming out. I'm like, okay, you have a credit card, that's great, but don't use it until you can afford it. And they always ask me what I mean. I said, okay, if you want the Jordans, make sure you have cash to buy the Jordans, but use your credit card and then go straight to the bank teller and put the money.
Or your online banking. It's 2017. People aren't always going to the bank, but if you have it in your bank account,
there you go.
Make that payment immediately.
Yeah, pay it back off.
It's always
don't
best
wait.
to pay off your credit card balances every month prior to the actual due date.
Oh, okay.
It does help with your credit score as well.
So my due date is on the 15th. Don't wait till the 15th.
No. If I made that purchase on the 1st of the month and I know my due date's on the 15th, I have the money in my account right now, make the payment right now. The main thing about it is that you're still utilizing the credit. It's the usage and payment cycling or habit that you develop that's what's going to establish your credit score at a higher level.
Okay.
Another quick tip for individuals with credit that might be newer to credit, or even if you have credit and might have had some issues. If you have balances that are very high, that's another thing that also keeps your credit score relatively lower.
Okay.
In an example where you have $1,000 card as a limit and your balance is $999, $950, or whatnot, let's say it's even over, you want to try and get your balances at 75% of your limit or less. If you're not paying the whole thing off by the end of the month, you're still going to make your payment that's due by the due date, but you want to try and get your balances at 75% of the limit or less. Now, in a scenario where you had $2,000 cards, and let's say one had 900 and the other one only had 100, you might want to consider transferring some of that balance over to the other card so that you're lowering the limits on the balances rather on both, so that they're both under 75%.
All right, so we're going to talk about the tricks and trades about how to do that in a few minutes.
Definitely.
We're going to take a quick break, and you're watching CMJ Live. And see, I'm telling you, I'm helping you out, all right? Stay tuned. We'll be right back.
Are you retiring smart? Make your home's equity work for you. With your home's equity and our 30 years of experience, the Retire Smart Properties team can help you achieve the quality of life you've always wanted. Our services are 360 degrees. We'll give you advice, take care of staging and selling, and help you find the perfect home and community to transition to. It's time to enjoy the retirement lifestyle you deserve. Visit our website today to learn how you can use your home to retire comfortably. The Retire Smart Properties team, powered by RE/MAX West.
Yes, we're back live on CMJ Live. Okay, we're just
good times.
We're having fun in the studio.
Yeah.
So here it is. You were talking about when we went to break about how to manage the cards. Because a lot of people don't know that. Like I was talking to somebody the other day, and she said the same thing you did, and that's why I said, okay, let's stay on this before we go to break.
Sure, definitely.
You have two cards, and then one card is great; it's nothing on there,
right?
And then one card has a balance of $6,000. You're saying we can transfer it, or what's
now? Okay, so we have to keep in mind there's ways to transfer that are more cost effective than others.
Okay.
Now, I'm not saying if you have a balance on your one card to do a cash advance on that card,
Right.
and then on the other card to pay
Right.
off that particular card that has the balance. Because
Right.
once you do a cash advance,
Yeah.
you're paying cash advance interest rate, which is usually the top interest rate on that card. Could be 18.99%,
Okay.
could be 21.99%.
Okay.
And sometimes individuals don't understand that when it comes to credit, that when you're doing an advance, it's not the same as making a purchase. When you make a purchase, you have usually between 21, depends on the card. It could be 15, 21 or more, maybe 23 days before you have to make a payment. And that's actually a grace period where you're not being charged interest.
Right.
After that portion, if you haven't paid off the balance, then you're going to be charged interest for the full amount of days.
Okay.
Right? So in a scenario where you have the balances set up, if you could manage it before you get to that level, I would say split up the purchases. Like, keep one set over here, a certain set over here, and then just stay within 75% of the limit. Now, if you've already run up the balance, what you might want to look into, and it's just a tip, if you have a credit card with a company that you've been operating in very good standing, and that's the key, you have to have been in good standing, you can contact these companies, and what they like to offer, a lot of them, is what's called a balance transfer. Balance transfer options can be interest rate range anywhere from 1.99% to maybe 4 or 5%, as opposed to the 21% on the actual card. This is a bonus added feature that a lot of companies offer to their clients that are paying and that are in good standing, that have good credit. So in that scenario, for example, the card that you had that had no balance, if, for example, it was an institution that supported the balance transfer, which again, most of them do, they might not always overly advertise it to you, but I say to my clients, give them a call and double check, because sometimes they have no idea until they call and find out, oh yeah, you know what, this company is giving me 1.99% for the next 8 months or 12 months if I balance transfer. And then in that scenario, what ends up happening is you take that balance transfer from that empty card, maybe 3,000, 4,000, whatever it is, you transfer it over to the card that has the higher balance, and now you've lowered the balance below 75% of the limit on the one card. Your other card is taking some of the other balance over, and it's at a much lower interest rate. Now your interest charges every month are going to be a lot cheaper until you're able to pay that off. I've known individuals that have had like $30,000 credit cards with balance transfer options that they then take some of that money off at a very, very low interest rate with a structured game plan, of course, and use that money to put for a down payment for a home closing in 2-3 years down the road. So they know in the next year or so they're going to have enough money based on their structured plan or their work ethic that they're going to pay that balance down, but they don't have it right now. But they need to put that money down right now to buy the house.
So they balance it out and transfer it out.
Again, it's something that you have to be confident in. You have to make sure you plan properly. Nobody knows exactly what the future holds, but if you on your grind, you're working, you're setting goals, you're saving money. It's something that you can get into now as opposed to waiting. A thing that I see very often in this game is that a lot of people tell me they're waiting till they have X amount of dollars before they can look into purchasing a property, and especially if it's a new construction. And the beauty about a new construction is you usually have a lot of time before you actually close the deal. So if you have some of it now, you can start putting the down payment now and work towards it in the future.
And most times the builder sometimes pushes back the date.
Very true. Very true.
Because they're allowed to push it back 3 times, I believe, 3 or 2 times. So that's 3 months, 3 months, 3 months. So now you have an extra 3 months to keep putting money in.
That's saved many people's lives. I've seen that happen. Even a year, things have been pushed back. So
keep pushing it back.
But the thing about it is that you're taking that risk. You're jumping into the game because too many people are fear. I feel like we live in a society that everybody's like too afraid to take a step forward. It's like this is their universal challenge line. And they don't want to go past it. And the reality is, the moment you do push past your fears and you step past that universal challenge line that we all have, doesn't matter what it is, that glass ceiling, you're going to find yourself getting the biggest rewards in life. But you're never going to know unless you try.
And it's funny, my last 4 episodes, it seems to me every conversation, the interviews I have with my last 4 episodes, we're all saying the same thing.
I didn't see the last 2, so this is no biased talk here. I'm being honest.
But that's funny that you mentioned that, because that's what we keep talking about. Nothing's stopping you. Okay, don't let something stop you. Take a chance, move forward, because like you said, if you keep thinking, I don't know, you're missing great opportunities out there.
For sure.
If you don't know what you qualify for or what you do, There might be a house out there that needs to be sold real
That was your house.
real fat, and that was your house. That was your thing.
And that's like part of the thing I do every day. Like my website is giveyourdreamsachance.com. I chose that name because I felt like so many individuals around me growing up were just canceling out their dreams. They're not even giving their dreams an opportunity.
Right.
And it's like, why not? Why not you? Why can't you own that house? Why can't you be an opportunity? Why can't you have your own show up here?
Exactly.
You know, broadcasting to the world, sharing information and helping others. So, you know, I'm out here on that same vibe, and it's been working very well for me. I've been brokering. I didn't really get into my history, but I've been being a mortgage agent now for the last 3 years and a couple months.
Okay.
Prior to that, I was a mortgage underwriter. Mortgage underwriting is where I worked for a few different mortgage lenders and banks, and basically I was one of the individuals that would receive an application every day from various mortgage brokers. I would package the deal, look at everything, look at the credit, look at the income, verify everything on the back end, do a little bit of auditing, and then give it a yay or a nay with regards to the approval. And then I would make up all the paperwork. So
you understand the ins and outs, because you've been
Exactly.
to all 3 episodes: bank, back end, front end.
Amen.
Okay. So here's the question though,
Yeah.
because everybody's like, "Oh, this is all good. This is good. My credit is good. This is good." Here's the catch though.
Right.
Here's the catch. You get married, right?
Congrats.
There you go. You're all happy. Everything. Your credit, boom. Everything is good.
Yes.
Your partner didn't follow the rules that you do. So here's the question: when you go get the house, or you didn't have to get married. Maybe you say, "Oh, we're gonna go in together with a best friend or somebody. You're gonna, an investment together."
Yes.
Do they only look at the one credit, or do they look at both credits?
Well, every scenario is different. And I've seen thousands of scenarios, both from underwriting and being a broker, or an agent rather. So it's case by case. Now, I like to be looking at the whole approach. So if we need to involve both individuals income-wise, it's mandatory that we have to look at both individuals' credit. Some scenarios, once I actually crunch the numbers, I can determine, well, hey, let's say it's yourself and your spouse, and let's say one individual makes a certain amount of money and can cover the amount for both. I could still put both of them on the same deal and just use one person's income. And therefore, the other individual who has the bruised credit or whatever in the past, we can just work on sorting out that issue. I don't ever want to have my clients leave a scenario not understanding where their credit situation is. Good, bad, or ugly, I'm always going to be involved with regards to helping you improve it. Showing you little tidbits on how to make it better, whether you're seasoned or not. Like, the industry is forever changing when it comes to mortgages, borrowing, and credit. So, believe it or not, I could find some sort of added information that could benefit even the person that has the most seasoned credit, and down to the individual who are struggling. Now, the main thing with people that are struggling is to find a common ground with them so that they can understand it's a comfort level that you can have with me to share this information. I've had individuals where one spouse doesn't want to declare it to the other spouse what's going on, and that's fine. No problem. I mean, confidentiality is the backbone of my business, and I will never disclose your information to anyone that you don't want me to. Like, it's just between us. That's how I work. I know sometimes I have friends and individuals, family that are reluctant to probably share information with me, but it's a work in progress. I've had to speak to a lot of them and let them know clearly that I'm not really interested in where you shop, what you buy, and this and that.
I'm here to help.
I'm here to help, literally, but everyone kind of says that, but not too many people are literally doing that. But like, I'm literally going to give you a game plan to get that credit back up to where it needs to be within the next 3, 6 to a year, depending on how good or bad it is. Usually it's within 6 months or so. To sort them out.
And then going on what
That's
you just
added info.
Yeah, what you just touched on. When's the best time? Like, we all have different credits. We all have different things. We want to make purchases. But then, is there a time where we say, okay, you buckle down from here to here because we're going to get this, or is it just buckle down? There's no straight time to do it. Because I know a lot of people say, oh, I need to buckle time from November, so around summertime comes around, I can make my purchases.
So,
like, how long does the credit score...
Make my purchases in terms of, like, with credit?
Yeah, because we want to know, how long does it take to wipe out to renew the credit score? So they say, oh, don't worry, I can put everything down in 1 month and my credit score is all good again.
No. I mean, to say it's all good again would imply that it wasn't that great at some point.
Right?
Right?
Because what I'm saying, like, say I have a debt of $6,000.
Right.
Okay. And I know we're looking at a house in like 2 months.
Right.
So I get all this money and drop it into the credit card and pay off their credit card.
Right.
Does that say that, oh, he's all good? Or do they go back to all those months before and look and go, well, he just paid off his credit card?
Well, when we pull your credit, it does show a history of payments. It'll show if you had slow payments. It'll show what your current balance is within a month or so, give or take. So really, it doesn't make that much of a difference, and it's all relative to your scenario. So if, let's say, that $6,000 debt is going to generate a payment per month, which then limits the amount that you could qualify for,
right?
Then yeah, that would be something that when we've run the numbers initially, I would say, okay, we'd have to eliminate that $6,000 card in order for you to qualify to purchase this $500,000 place or to get this particular mortgage. In some scenarios as well, if that's a $6,000 card balance and your limit is $6,000, that's telling me that okay, he's at his limit. But I have individuals that have multiple cards. A lot of them are at their limits, but they're making all their payments. They make good money, but their score is still good. It's not like your score is going to plummet because you've maxed your cards. It's when you start to become late. I'm just telling you that these habits don't improve your situation when it comes to your credit.
So it's not.
Right?
See, some people, like for even myself, I'm learning different things that you're telling me now.
Great.
So I'm thinking it's not about the payments; it's the consistency of the payments.
Well, yeah, I don't know how I could say it's not about the payment because you always got to make that payment.
No, that's what I mean. Sorry.
Like you must make your payment.
Yeah,
like,
make the
some
payment.
people say that to me when I look at their credit and they're like 3 months behind. We're like, oh yeah, but I paid my rent. Okay, I get it. It makes sense, but you got to respect everything the same. Like, and especially if it's got a minimum payment.
Yeah.
You know, if your minimum payment was a few bucks, but you're spending more than that on food, like in the last 2 days, you got to prioritize your life.
Right.
And it's a uncomfortable discussions sometimes because people know that they should be doing better sometimes with their credit, but don't want to discuss it, right? And then it's funny because it could be a spiraling point going downward, or it could be a turning point, a 180 point, just by having a little bit more information to do things a little bit differently.
It does, because
right?
I've learned, for me, and we all have credit cards, we all have things, but like knowing the balance, knowing the transfer, knowing that there's people out there that would help you with things is a big help.
When I calculate the numbers, I like to do like a rough copy before I do any sort of actual applications. Like I have a spreadsheet that's designed that mimics my mortgage application. So I ask questions to my clients to ask, like, what sort of income do you make? Tell me a little bit about your credit, and then from that information, I sort of give a quick rough copy to ensure that you're going to qualify.
So
before I do the actual
before we go more into that, we're going to hit a quick commercial. But when we get back, we're going to dive in how you actually do it.
Sure.
I'm your client, step by step. We're going to go through the whole process to show them that, you know, it's not
it's not pulling teeth, friends.
It's not pulling teeth, right? You're watching CMJ Live. We'll be right back. Hey guys, we're back and I got my special guest here. Please reintroduce yourself.
Hi, Kevin Williams, mortgage agent.
All right.
Dominion Lending Centers, Home Capital Solutions. Woo! Happy Canada Day.
All right. So this is what's happening right now. We're going to go step by step and we're going to talk about how the process is. Okay?
Okay.
How do we do the lending? How do we do everything step by step? Okay?
Okay.
So I call you.
Yes.
I say, I'm looking to do certain things. What's the next step?
All right. Well, usually I get a lot of referrals from people that I know well, centers of influence, some real estate agents that I work with, other financial professionals, and some people that are just good with people generally.
Okay.
So that oftentimes results in a warm referral. When I get a warm referral, it means that someone else is a common friend to both of us.
Right.
So that sort of breaks a little bit of the ice when it comes to me having a comfort level with dealing with you.
Okay.
If it's someone that I have never met before, someone that I might have found from online or whatnot that contacts me, usually I meet up with them so I can get a better comfort level with the individual. So having said that, I usually the client contacts me, find out your situation, whatever it is you're looking for,
Right.
and then I express the same thing I was telling you before. I like to gather some general information about the client, some background to get an idea
Right.
of what sort of income level you have. We're all basically sort of judged by the same formulas when it comes to qualification for mortgages.
Okay.
What varies between all of us is things like our income level, what type of job that we have, how we make our income. Are we self-employed? Do we work for someone? Salaried? Are we hourly? Our credit level. Credit level is going to determine how many different lenders we're going to have access to, A lenders, B lenders, if there's any bruised credit that requires some rehabilitation with my advice. And then also we look at how much money that you bring to the table. If it's a purchase, how much do you have for down payment? Do you have for closing costs? If you already own a home, that same equivalent would be known as the equity in your home. Basically the difference between the value in your home and what you owe in a mortgage. So if in a refinance scenario you wanted to pay off debts,
Right.
the equity is what I'd be looking at in terms of that difference.
Okay.
So usually those are the major things I assess for the individual to then put into my spreadsheet. I put the income in, get an idea of what sort of property you're looking for.
So do we come to you or do you come to us?
I do both.
Okay.
We have offices throughout the GTA in various locations, so
Okay.
I usually give my clients that option. So back to the whole warm referral thing. If you came from a person that we both know, a warm referral, I'll give you an option. Not everybody, like the way I do my business is not the way everybody does their
Right,
business.
of course.
So
That's
I
why
like to give my clients options. It's 2017. A lot of people are busy. They're on the move. People are also very tech savvy. So I like to say to my clients, if you would like to meet in person, I give them options to meet in offices throughout the GTA. Sometimes I meet clients at their home. If they're on the road, busy type people, I
Yeah.
correspond with clients over the phone, and we do a lot of work via email.
Okay.
So that I figure out which method they prefer.
Right.
If we're on the phone and they have some time, sometimes I just get the application done immediately right over the phone. 15 minutes, gather the information, load everything up. I do have some documentation that I normally obtain. I send them like my consent form that allows me to pull your credit
Right.
to get an idea of what your credit looks like. This is what I do after I've done my little rough assessment, right? Because if the rough assessment doesn't really jive, there's something that we have to address before I take
We
it
have
to
to
that
work
level.
it out, right.
Yeah, and I don't feel that it's right for me to go and just pull your credit without really doing some research first to get an idea if you're even in the ballpark to be
Right.
doing what you're doing.
And what are you looking
right?
for?
Exactly. But I have people who weren't even close, but they had some issues, give them some advice. 3 months later, they come back to me. We're rocking.
Okay.
Rocking and rolling. Okay, so for that scenario, start doing the application, take the information. If all goes well, I let you know about some of the options with regards to the rates, the lenders, what you can expect, turnaround times, and we go from there.
Okay,
Yeah.
so here, I always go to my Instagram. Hold on.
Fun times.
Go to my followers and ask them what questions they have. So I have one question here. We haven't given out a phone number yet.
Oh.
They want to know how can they contact you. So
I
number
can be
one.
reached at 416-721-7253. That is my mobile. That's the best way to reach me. And if I am a little bit tied up, leave a message. I definitely will get back to you. My
And-
website is www.giveyourdreamsachance.com. That is giveyourdreamsachance.com.
Okay, and then someone
And-
just asked, are you only based in Canada? Because we have a lot of people from the States
Right,
watching. Or
right.
can you help people in the States help them with their credits and help them, just help them with their stuff?
Listen, I'm about helping people, okay? I am a mortgage agent. I work in Canada. I help individuals all across Canada, different provinces as well. But credit is something, especially in North America, it's pretty common. So I would love to help an individual out. One of my American friends, no problem. It's all about helping each other. I'm here to serve. So helping people is helping me get a lot more clients coming back to me. So sure, definitely. If you have any inquiries about how to fix up your credit situation, for sure. I wanted to give you my email as well, because that's a phenomenal way to reach me, to share information, and I can get back to you a lot quicker. And that's Kevin Williams at dominionlending.ca. Okay, Kevin Williams at dominionlending.ca. So yeah, definitely send me an email, ask me a question. you never know. Like, I have some clients that are from the United States that have bought properties here. And
well, that's why I think that's why this gentleman was asking if you can help them out back and forth, or do they have to wait till they come here first before you can start working it
It's
out?
all a part of preparation, right? So if you're going to go live in another country, I'm sure you would find out, research, do your information before you move to the country, right? So same thing. We have a lot of foreign investors out there and people that are trying to move and live here. So yeah, I would love to help with regards to that, because why not? It's an ever-changing market, and what we were doing a year ago for foreign investors is different now. So it's good to have someone who knows what's going on and staying up to date.
So that leads me into my next question.
Yeah.
When they go to you, and they qualify, how long is that good for?
My qualifications. Okay, so depending on the lenders, they tend to be approvals good for 90 days up to 120 days, so 3 to 4 months. Occasionally, I can get deals or approvals for longer. I have a lot of clients that do pre-construction stuff. They don't close for like 3 years down the road. And it's rare to find lenders that are giving approvals with actual concrete rates now for something 3 years down the road. So I've done some pre-approvals, a few letters for clients that needed to make sure that they qualify for their builders. And then when it comes closer to the actual renewal date, 6 months, 4 months, 3 months towards their actual, not renewal, closing date rather, then I try to solidify a solid deal for them at that point.
Okay, so then just so people understand. When you mean by it goes 90 days or 120 days. When the 120 days is over, do we just call you and say, okay, renew it? Or do we have to go through the whole process all over again?
I have all the information. Right? Well, basically, what happens for that 90 to 100 day period, 120 day period, the lender is literally they're securing your rate for you. It's like a rate hold. So if I got you 259 today, 5-year fixed, you're guaranteed to get that rate between now and the next 120 days with most of my lenders. Right. So if rates come down, then I can get you that lower rate as well. Now, let's say we're at the 121st day and your closing gets delayed. You need another 90 days or 30 days. At that point, all I would need to do is assess another credit bureau check to ensure that your credit is still at the same standing or equal to or better than it was 120 days prior. And then you're good for another 120 days.
Okay, so then here's a phenomenal question. And someone wants to know, is it a signed contract with you? So say we start off with you doing our mortgage and everything, and then someone says, oh, you should use my other...
No, you're signed to me forever. Your children,
from generation to generation. No, because somebody wants to know, they're asking, okay, so we sign with you, and then, Chelsea says, oh, I got a good person for you. She sends me her cousin, and her cousin says, I can do mortgages for you and blah, 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 same thing. Can I leave you and go check what he has to offer? Or am I signed with you?
Personally, do not force anyone to work with me.
Okay.
I feel that I'm confident enough to say that I will add enough value to your experience that you're not going to want to go with somebody else.
Okay.
So, but yeah, you're free to do whatever you wish at any point in time, but just know that there aren't too many individuals that are going to share as much information that I am. I have an invested interest in making sure that you're getting the best that's out there. Sometimes people need to understand as well, getting the best mortgage that suits you doesn't necessarily mean it's got to be the absolute lowest rate. Sometimes you might get a slightly higher rate, but the path to get you to that mortgage was so much simpler with this lender that you appreciated the experience. Or that lender has options that allow you to pay that morttage down a lot faster than another bank.
Don't look at just one number. Look at the whole basis.
It's the whole experience.
How you do it.
Exactly. As well as there aren't too many brokers out here that can say they're going to make an invested interest in making sure your credit is where it needs to be. If you keep your credit at a high level and I help you maintain that, you're going to have a lot more options in your life. Things will be easier. Borrowing power is going to be stronger. And that's what's important. I'm not just here to just facilitate the deal and send you on your way. There has to be some gradually motivating, increasing your knowledge and making you feel more confident about it. I think that's important. I feel that way when I go somewhere and I'm not an expert at, I can do the basic mechanic work, but when a mechanic breaks down this, that, and a third to me when I'm there, I see the value in that. I'm getting education. So I'm like, okay, next time I'll maybe look at this, look at that. That guy is going to get my business again for sure because he added more value.
Okay, so before we go to a quick break, because we have a few seconds, I want to tap into this.
Sure.
So you help us get the mortgage.
Yes.
We're in our house.
Yes.
We're loving it. We love it.
I'm glad you're loving it.
We did a 5-year plan.
Awesome.
5 years come up. Time to renewal.
You call me. Call me.
Okay, so we can come back to you, and you can look into the same, or you can look into some things we can tweak to make it easier.
The thing about it is, I have clients that do that all the time. They come up for renewal, and what happens is lenders are very savvy at sending out renewals to your clients automatically.
Right, that's what I'm asking.
3 months before, they'll hit you up like, "Hey, you're renewing in 3-4 months. You wanna, we're gonna waive a renewal fee. We're gonna give you this. We're gonna give you that."
And we're all excited, thinking, "Yeah, look, hon, we got cheaper this. They're gonna do this."
I implore you,
okay,
contact me, because just because you're getting that renewal offer, it is nice. You paid the mortgage well for the last 5 years. They didn't kick you out, so to speak. Good for you, but it doesn't hurt you to be informed. And their rates are always changing. Last night I got a few emails. Some rates were going up with a couple of my main lenders, and it's common across the board, and these things happen. So if you're getting a renewal notice, you might be getting $269. Maybe I can get you $259 or $249 with the same lender even. Sometimes they don't even offer it to you until someone like me comes back and says, "Hey,
we don't know it's there." But if you go and say, "Hey guys, don't forget you should be offering my client this, this, and this," and they're like, "Okay," because they want us to jump early. That's why the thing's there.
If you went to court, most of us are not going to go on our own and defend ourselves, right? So treat me the same way. I feel like I'm like your lawyer when it comes to the mortgage game. I'm going to look for your best interests, show you all the loopholes, let you know what's happening with the market right now. Same thing with real estate professionals. I often refer friends to real estate professionals that are out in the market, because individuals feel like, "Oh, I don't want to pay an agent, this, that, and the third." But next thing you know, I refer them to my agent. My agent's telling them 10 different points they never even thought of before they go into that deal, and still didn't even work with them. He did that for free. So all these things we do to give back as well and add value.
All right, we're going to take a quick break. Let's pay some bills. We'll be back. You're watching CMJ Live. Here we go. And we're back.
Yes.
The joy of live shows, you know.
I love it. This is awesome. I gotta do this more often.
So listen, we got a few minutes left because our next show is coming in. So we're gonna wrap and then go for a little bit. But here's the thing. Tips and tricks. You always, I noticed that you're always, even when we're talking off, your main thing is not so much, and I hear it over and over again. It's not about the business. You're more into helping the person. You know what I mean? Like you keep saying, "Oh, I'll help you with this. I'll tell you with this." Little things I want to help you with. So it's more about helping the person than it is about the business, which is a phenomenal aspect a lot of people don't do.
Thank you.
Right? Question is, what do you get out of it? Yeah, because people are gonna be like, "Well, he's got to be doing something to get out of it."
Here's the thing: I dare individuals these days to change your thinking. That's all I can say. So I worked in the industry for quite a long time, and I was honestly always motivated by the funds, by the money.
Yeah.
Work hard, get another job, went downtown, went here, went there, trying to chase a dollar.
Right.
I realized after I stepped away from that and started doing my own thing that I'm going to try something that's a little different. I'm going to be a little bit ideal about my business. I'm going to try and do what I want to do. I want to incorporate things in my life that are important, like health and fitness. That's why I go to the gym every day. Like hit some boot camp class, quick fitness, hit it up. It's a great spot. And make that a part of life. And I just realized that I was a happier person just focusing more on serving others than more so chasing the money.
Right.
And miraculously, what happened was
the money
follows.
Exactly.
It follows at levels that I wasn't even thinking about. So now I'm writing down goals. And I implore people to do that too. Write down your goals, write down things you want to achieve, look at it daily, get a vision board going. If you don't have a vision board, if you don't know what that is, it's like writing down, big things that you want to do and putting it on a big board, put it in your house, put it in your bedroom, somewhere where you can see it every day. And it'll change your thinking, really. Giving back is something that you don't really realize how important it is until you start to do it and you see the change it makes in people's life. I love it. Personally, I love it. And I think that's another reason why a lot of people, refer people to me for that same vibe.
Right.
Positivity it might come across a little corny at times, but you know what? If you don't try to be positive, you're not putting positive stuff out there.
It doesn't come back to you.
It doesn't come back to you,
right.
whether you believe it or not. But like subconsciously, we absorb everything. So if you're saying negative things all the time, I can't, I won't, but
can I do it? I can't afford it. I don't know.
Instead of like I'm working towards,
yes.
I'm gonna make an attempt to
put it in your head. If you want a new house by this time next year, put it on the goal. Put it in the house.
Put it in on the goals. Put it on your paper. Write it down. Put it on your vision board and repeat it. And don't stop saying that you can't. Stop saying things that you're not able to do.
Yeah.
Start to speak positivity into the world,
right.
and you'll be surprised on what kind of changes will happen. And again, it takes an honest effort for that to happen. Mm-hmm. Some people say they will, and then after they fall off the wagon, they're like back to negative Nancy.
Right.
That's not my style. So having changed that, I've noticed that it makes a big difference.
Okay.
I'm going to stop moving my chair because I see you grabbing it. So that's the reason why.
Okay.
And I've had opportunities, to be honest with you, where I'm talking to a client, somewhere publicly where we've met, and then someone has overheard, and they sat with me, and they start talking. We're talking for 2 hours about nothing to do that's going to result in business for me. Yeah. But I actually enjoy that. Same thing when with fitness and health. Sometimes
because that's what I'm saying. The reason I brought that up, because before you came on the show, and I was telling you about the show, we talked about helping people, getting people out of debt, get people in the homes. There's opportunities out there. You might have missed a window because we don't try. So I said, you know something? I just want people to understand that this is what you do. You come out, you have your own company, doing really well, and you're doing well because you are helping. Right. And that's the main thing. You're always looking to give tips and tricks. Like you brought a book in today.
Yeah, I brought in a book in case for my entrepreneur friends. This is an awesome book that I most recently read. It's by Colin Sprack. It's called Entrepreneur Success Recipe. It's a book that I recommend. I actually have 3 copies that I would be giving away. So if you're an entrepreneur, or even if you're not an entrepreneur, but you're a go-getter and you want a little bit more keys and pointers to help you get to the next level, I will send you a copy. First 3 people that email me that ask for it, I will send it to you. I will email it to you, I will mail it to you personally if you send inbox your address. So that's Kevin Williams at dominionlending.ca. Fantastic book. Did a seminar a few weeks ago, 3 days, Make Your Mark, a seminar with him, and it was phenomenal.
Okay.
Just opens up your mind to a different way of thinking and seeing things, and applying everything to my business and life is making a lot of changes. So educate yourself every day, people. Celebrate your successes every day. All these little things are important in life that I think a lot of us don't really do. And you'll see some changes. Again, the world is your oyster. We can do a lot of big things, but don't be afraid to get help. That's where, if I'm an expert in my area, I would love to help you get to, the level that I'm at and learn about my industry, just like I would learn from you. So,
question for you. I was just writing down my notes, and then I thought of something. A lot of these kids now, graduating from high school, going to college, university, cars. Is a car loan the same as Visa credit? Right. So if I go out, they buy just an everyday car just to get you from A to B. It's not the brand new car. You went to got a used car. Does the credit score look at a car as same as a credit card? So I have a credit card, and my next one will be a car. How does that work out?
Okay, so there's 2 types of credit that show up on your credit bureau. There's revolving credit, and then there's installments. So a revolving credit would be something that is you pay and you use, It has a limit. Credit cards, credit lines, secured credit lines, those fall under revolving credit. Installments are things like loans, student loans, car loans, RSP loans, personal loans.
Right.
Yes, it does help your credit score.
Okay.
It's probably a little less effective than revolving credit, because if you think about it, that institution gave you $10,000 for your car loan.
Right.
And then they gave you a structured payment plan between now and the next 3 years, 5 years to pay that off.
Okay.
And it's up to you if you pay any extra. So really, it's a lot easier to maintain that because you don't have to think about it. Your payment comes out.
It just comes out. You just go whatever.
But when you're talking about $10,000 in a credit card and you're going to use it, the onus is on you to make that payment.
When to pay it back,
right?
how to pay
Exactly.
it back, whatever.
So yes, it does affect your credit score. Yes, it is treated as an actual trade line.
Right.
The value of it, I would personally say, is a little bit less than that of a revolving trade line.
Okay.
I've had clients that have 2 car loans but have no revolving credit, and it's a little bit tougher to place them with their mortgage.
Is it because they're not seeing it when it's coming in, how much you're going to put down, all that stuff?
Well, they haven't shown or demonstrated that they can handle revolving credit.
Okay.
Right? And the point of this is, of establishing the 2 pieces of credit, is to show that you can handle it. That's the main thing. Like, it seems weird, but people will get some stuff and just run it up and just not respect it and then think nothing's going to happen.
Okay.
And then 10 years later, wondering why their credit score is 500 and can't get a mortgage that they like. They can still get a mortgage, but
wait.
maybe that one they
You
like.
said something that I didn't ask you, and I'm glad you just touched on it. You said credit score 500.
Yeah.
What's your credit score supposed to be?
Well, credit scores, they range. Nowadays, I would say keeping your credit score at 680 or higher is probably very beneficial to you. You usually get more options that way. I do clients with 600 beacon scores that are in the 500s. If you're less than 600, usually there's an issue with the credit.
Okay.
Like, you might have some slow payment of some sort, or maybe you have a collection from the past that you're not addressing. But I implore everyone, even myself, every year I pull my own credit. I go to Equifax.ca, I pull my own credit, I pay the $23.95 just to take a look at what's there, making sure that everything is in line. Because the worst thing you would hate to have happen is when you're ready to buy your house, and then we pull your credit, and then you have that $500 Rogers bill from 6 years ago. That's
sitting there including, and it's a funny bill.
It's stabbing your credit score, and it should be like 700, but your credit score is like 580. You know, and then next thing you know, if you're under 620-ish, let's say maybe 630-ish these days, you're not going to have an option to deal with most of the A lenders that have the amazing rates. Now, I can give mortgages to individuals that don't want to fix their credit up, or they're in a position where their credit isn't going to be ready to be fixed right now.
Right.
But they're ready to buy something. They have the money. They might end up with the 4.5% rate, a B type lender. Because there are B lenders out there that help individuals with that kind of credit.
Yeah.
But what I like to do is keep them in a short term, so that way in 1 year's time I will have that credit improved, so that I could then take them from that B lender and put them to an A lender that will give them 2 point something, a really low interest rate that's out there. And again, building up that client, helping them understand their woes with regards to credit and how to fix that. And ultimately, culturally, it doesn't even matter. Like, every culture is exposed. We're all exposed to the same thing. But, you know, Caribbean background, parents are Jamaican, I'm born here. You know, it's all too common, especially in this particular area in the Caribbean, that our people sort of have a fear of credit and let it sort of either ruin them, or they're too afraid to even dabble into it.
To use it, period.
But I'm telling you, it's an empowering thing once you know how to use it, and once you know the value of it. And I'm telling you, all different cultures are doing it. Like, my clientele base is all different people, just like our community is.
Time's running out, so I want to touch real quick, because I want to give you the thing. Like, in like 1 minute, what's the best credit card to get?
The best credit card to get? That is a loaded question. So it does depend on your credit score and where you lie. Okay, so if let me just answer quick. If you're struggling, if you've kind of messed your credit up and you have no credit right now, and you're one of those people that are reluctant to step into something, contact me. Let's look over your credit. And worst case scenario, I would say get yourself a secured credit card where you put up $300, they'll give you a $300 credit card, and that's your chance to now rehabilitate yourself. Once you start using it, they'll give you back your $300. Then they'll make that card a regular card, maybe a $500 limit, $1,000 limit, and you're on the road to reapproving your credit.
Go back.
If your credit is good right now, solid credit, you know it's in order, it's over 680, I would say the Amex Gold, solid card right now. No annual fee, and they're giving away all these points. Literally, it's free money.
Okay.
And they're waiving the annual fee.
Okay.
I think it's $250 worth of free credits.
Okay.
Right? And all you have to do is just apply for it. That's the beauty of having good credit. You get to take advantage of things like that. There's so many more steps that I can talk to you about with regards to that, but that's going to be another time.
All right, so listen, we got 53 seconds left before our show goes. You're on CMJ Live. I do this with everybody.
All right.
It's called the Shout Out. Thank anybody you want to thank before we go.
I want to thank God. No, I don't. Definitely, seriously, I'm blessed. I'm totally blessed. I really acknowledge it. Thank you to all of my friends, my family, everyone that supports me. Chuck, thank you very much for this opportunity.
Not a problem, my friend.
Thank you, generally. Canada. It's Canada's birthday. Thank you, Canada, for having this wonderful place to live so that we can deal with all these wonderful individuals and have this opportunity to shine. Shine, people. Do big things. Why not? Why not you?
Thank you for watching CMJ Live. It is Canada long weekend, 150. So if you go out there and you're having fun, please be safe.
Definitely.
I want to make sure that you come back to watch me next week, Thursdays and Fridays. So be safe, enjoy family. We'll see you next time.
Take care.